welcome to Business Incorporated live on Channels Television. We'll be tracking the markets, the economy, and see how all this affects your pockets. Here are the stories making the headlines. Now, Egypt reaches initial IMF deal for $8 billion loan package. The Central Bank of Kenya's new loan pricing cuts borrowing costs. And Ghana to open trade office in China to boost bilateral commerce. Great to have you join us for this half hour. I'm Will Ibang. Let's get a check-in on the commodities markets. First things first, we see oil prices eased in early trade. We see that oil prices up 0.5% to sit at $64.35 a barrel. And we see WTI at 0.7% at $59.65 a barrel. Let's quickly check in on the metal space now and see what is happening there after geopolitical tensions are easing. We're seeing spot gold down $4,917.37, and we see U.S. gold futures also up. However, on the flip side, 0.2%. Spot silver is up as well. Platinum also up. Palladium down. Copper is also up. And let's check in on what's happening in other news right now. We see Afreximbank, that's the Afrexim Export-Import Bank, has officially ended its credit rating relationship with Fitch Ratings. Now, according to the Afreximbank, the decision comes after a review and notes that the Fitch Ratings no longer reflects the bank's mission or mandate. Now, despite the change, the bank says its business remains strong, supported by robust shareholder ties and legal protections in its establishment agreement. Afreximbank, a Pan-African bank with over $40 billion in assets, continues to back the African Continental Free Trade Agreement through initiatives like the Pan-African Payments and Settlement System, PAPS, and a $10 billion adjusted fund. Now we're seeing Kenya's borrowers are paying less for loans as a new loan pricing model introduced by the Central Bank of Kenya begins to take effect and pushes down lending rates across the banking sector. Now, according to the CBK data, the average lending rate among the country's 38 banks falls to about 14.8% in December 2025, down from 15.24% in July 25. And this is marking a broad-based decline following the rollout of the revised risk-based credit pricing model that was on December the 1st last year. Now, under the updated framework, we see banks are required to price new variable rate loans using a public reference rate. Initially, the Kenya shilling overnight banking interbank average rate was being used now, plus a customer-specific risk premium. Now, all existing variable rate loans are set to migrate into the system by late February. Let's look at other stories now. Manufacturers are raising alarm over severe port congestions at the port of Mombasa, warning that delays in clearing cargo, disrupting imports of raw materials and exports of finished goods, and threatening production and competitiveness. According to this is according to the Kenya Association of Manufacturers. Now, the congestion has intensified towards the end of 2025 and into 2026 as total cargo volumes climbed and container traffic increased. And the shortage of depots and poor evacuation plans by shipping lines have compounded the problem, leading to vessels leaving without loading empty containers. Manufacturers say they now face slower delivery of essential imports like petroleum products, steel, chemicals, and machinery. And these are crucial inputs for sectors such as electrical, automotive, plastics, and food processing, and added pressure on export timelines. Now let's look at Ethiopia now in the shift to market-based foreign exchange system under an IMF-supported reform program, and that is linked to significant unrealized financial losses of about $2.6 billion. And the National Bank of Ethiopia revealed this in its latest audited account. Now, the central bank report says it has moved from a fixed to a market-driven exchange rate regime in July 2024, and that's part of the broader IMF-backed reforms aimed at stabilizing the currency and improving macroeconomic fundamentals. However, the change triggered a sharp rise in foreign exchange losses when the bank's Foreign currency assets and liabilities were revalued under the new system. And the forex reforms form part of Ethiopia's broader homegrown economic financing reform agenda supported by the IMF under a multi-year financing program. Now, this program includes measures to strengthen monetary policy and improve stability, fiscal stability. Despite these recent losses, the IMF has continued to approve disbursements and also to help Ethiopia manage a balance of payments needs and support ongoing reforms. Now, the latest now, Central Bank of Libya has opened a subscription for its latest issue of unrestricted Mudaraba certificates of deposit, inviting commercial banks to participate in the offering under established procedures. Now, in an official announcement, the bank said the move is part of its ongoing efforts to enhance banking liquidity and stimulate activity in the domestic financial markets. And certificates compliant with Islamic finance principles are designed to support monetary stability and improve how commercial banks manage assets and liabilities. And CBL notes that these certificates provide banks with a safe financial instrument for investment, and that strengthens their capacity to finance a range of economic activities and potentially boost overall confidence in Libya's financial system. Now let's go to Ghana now, who is moving to strengthen its economic ties with China by opening a new trade office in Nanjing, Shandong province in 2026. Now, officials are saying this. Now, the trade office is expected to enhance bilateral commerce and attract investments between the two countries. And Trade and Industry Minister Elizabeth Ofusu Ajari announced the plan during a farewell visit from the outgoing Chinese ambassador to Ghana, that's Dafa. She described the new office as part of Ghana's strategy to deepen trade relations and expand investment opportunities with China, one of its largest commercial partners. And the government also indicated it is ready to sign a zero-tariff agreement with China, which could further boost trade flows and create new opportunities for Ghanaian exporters. Now, more still coming in from the World Economic Forum in Davos. The Director General of the World Trade Organization, Ngozi Okonjo-Iweala, has shared a vision for the future of global trade, describing it as increasingly digital and full of opportunities. She spoke about her hopes that digital trade can boost growth, help small businesses, and expand access to markets worldwide. Mrs. Okonjo-Iweala said the WTO welcomes the evolving changes in digital commerce and is working to support countries as they adapt to these new trading realities. Let's take a listen.
What I dream about are the exciting things happening in trade, the digital trade. And you know why I dream about it? Because when I visit, people don't often talk of South America, what's happening there, Africa, what's happening there. And then when I go home and I see young people, you know, anytime they know I'm there, they're coming with new applications that they've made, and in fintech, securitech, in edutech. Then there are also people, women and young people, trade digitally and reaching customers across the globe. So, as the minister from Korea said, digital trade is just so exciting, and it's happening at a very fast pace. My minister from UK talked about services. Services trade is growing at 4.4%. We're projecting this year. You know, that is double what goods trade grew last year. Green trade is now 2 trillion. So what I'm seeing in trade, I don't know about others, is opportunities. You've got a system that is changing in very many ways. And those changes are not competing with the WTO. We welcome the changes because we have a whole unit dedicated to examining every FTA and RTA when they notify them. But when not notified, they go and get the information. I ask them, go and look. On what basis are these agreements being reached? And believe it or not, most of them are on a WTO platform. So the basic rules underpinning, except for the US ones, okay, so let's put those aside. Those are definitely not on a WTO platform.
Now, still at the World Economic Forum, briefing the media on the sidelines of the event in Davos, Switzerland, South Africa's International Relations and Cooperation Minister Ronald Lamola has reiterated that South Africa will continue to seek alternative markets while negotiations with the U.S. continues. Minister Lamola also urged South Africans to brace themselves for the difficulties that will come with changes. Meanwhile, South Africa has been selected to host the Spring Davos World Economic Forum in 2027.
Regards to whether we will have a different approach in our relations with the U.S. Since this issue of tariffs started, South Africa started its diversification process. You will have seen the visits to the various parts of the globe, including Southeast Asia and many parts of the continent, to anchor on the Africa Free Trade area. And our stats do show that this diversification strategy in terms of trade, it is beginning to bear fruits, which are positive. So we'll continue on that path to diversify, to build self-sustainability within our own domestic capabilities, internal resource mobilization. That is what is needed within the country, but also for South Africans to gear up for the difficulties that will obviously arise as changes happen, to prepare ourselves for this unpredictable world, but remain calm, restrained, and continue to play our role in the various global platforms and multilateral institutions.
And from Davos, we jump into stock markets in Africa. Let's see what's happening to the NGX. It was up at intraday 0.05% at 165,483 points, lost that 166,000 points yesterday after we saw that more than 0.5% drop from profit taking from investors. Now we see South Africa, we see the GSC is also in the green, 0.4%. Let's look at Kenya, Egypt and Kenya, how they traded. EGX30 at intraday. Egypt, however, is close to yesterday, 0.9%. At 46,462, and Kenya traded on Thursday of 0.55% up. But let's check in what's happening on the floor of the exchange, and we have Ambrose Omodion, is the Chief Research Officer, Invest Data Consulting, to join us and give us more on that. Good afternoon, Ambrose. It's good to have you join us.
Thanks for having me.
Ambrose, what's driving trade? We know profit taking is necessary in the market, but what really drove that dip yesterday? It was more than expected, wasn't it?
If you say more than expected, that means, how will I say, market anytime, anywhere, we expect to see profit taking, position taking, and these are the lines of market anywhere in the world. Markets are kind of side-traded for almost 5 trading days, giving an insight that market is already consolidating, waiting for a breakout or a fake out. What we saw yesterday was profit taking, pulling the market down. Even at this hour, market is still mixed. We're seeing buyers more than the sellers in the market, just because people are waiting for what little alternative account to come in a moment from now. Well, I've seen few of them that hit the market, and those are giving insight what we expect from different sectors. From next week, we expect more results that will not prepare investors what to do between now and the end of the quarter.
Facts for, say, stocks. What stocks in particular are driving the positive momentum or positive sentiments we're seeing at intraday? Can you name some of them?
Yeah, for me, I see the life of CWG, see the life of other good companies, especially mid-cap companies and low-caps are the one dominating the market. But before now, I'll see that high caps are push our market to where it is today. But I believe that the more we see the earnings, there is you can see also high cap moving the market. As we speak now, the life of CWG, the life of Zenith Bank and others are the one pushing the market right now. But if you look at the flip side of the market as we speak right now, also seeing profit taking in some of the companies that rally like E-Cell, the life of First Good Code, and others are the one in the red as we speak now. But for me, there's no need for any investor or trader in the market to panic. But anytime you see that earnings around the corner, there's all kind of postponed reshuffling, sector rotation will continue for investors to prepare for these numbers. For me, it's the right time to buy into value, especially as I to say, most companies will pay dividend. We are seeing the history of this company performance in terms of their quarter result in 2025. Now that we are seeing the unaudited account from this company, that's why I said between now and end of the quarter, investors don't know what to do by what. Buying to people are going to pay them good dividend. It's also going to rally in terms of a capital appreciation. There's no cost for alarm. I believe that the tension at the global scene is because of all the political tension or trade tension slightly slowing down because of the outcome of the World Economic Forum. We just had recently. For me, there's no cause for alarm in our market.
We just saw on Tuesday a newly listed company, that's Zitches, an agro-processing, agro-allied company. What can you tell us about Zitches? What potential? Because we saw yesterday the rally that intraday. Is this something, a stock for us to be watching?
Actually, in our market here, we're not surprising new listed companies, moving in up direction. That is the nature of the market. Now they are new listed. We need to rally for a few days or weeks, pulling back. But investors are able to buy at the first listing day. Take your profit. But for those that are not there, don't panic or don't complain that we are missing out. We expect that the market will trade the stock where it belongs, especially after seeing the numbers from this company to tell us where they are going. But it's good that they are listing in a good sector. They have a sector. That is not a yazard that they rally. But it's the performance that price feed on anytime, any day. Market sentiment cannot take you for too far. But when your fundamentals are right, your earnings are right, market will also value you.
I'll definitely keep an eye on that. So in one word, what are we closing at today? Green or negative? Red?
Yeah, actually, I see the market closing in marginally red.
Marginally red. Okay, Ambrose. Yes. I do hope it flips and not you in the face. Thank you so much, Ambrose Omodian, Chief Research Officer, Invest Data Consulting, for joining us on Business Incorporated. Let's move on now to other markets. We see in the Middle East, Dubai and Abu Dhabi trading at intraday. Most markets there are closed, but Dubai and Abu Dhabi are still trading at intraday today. We see it down, however, in red, 0.39% for Dubai, and Abu Dhabi is 0.2%. Let's look at other markets there. For Thursday, we see the Tadawul in Saudi Arabia up 1.69%. That's what it closed at yesterday, and Qatar index over 1% as well. But let's look at other markets in the U.S. stock futures. You see how they performed. They were in the green, up 0.26% at 49,427. A lot of sentiment coming in because of geopolitical tensions are easing. We see that reflected in the futures markets. S&P futures also up 0.26%, and Nasdaq futures also up 0.4%. Now let's look at Asia markets and see how they performed in today's trading. You see them up, they all rose, mostly green markets. Nikkei in Japan is up 0.29% at 53,846 points. Kospi in South Korea up 0.76%. And we see in the Hang Seng index in China is also up. Shanghai in mainland China is also up 0.3%. The outlier here is India. We see it's nearly 1% down to settle at 25,064 points. Meanwhile, let's see what's happening in Europe now. And I'm sure Lars has got stories for us there. Lars, what's going on in Europe markets?
You're looking good over there with all that green on your board, but I have to add a little red to it because markets in Europe are pretty mixed today. We have the markets in Spain and in France slightly down. We have markets slightly up in the UK and also here in Germany. The DAX in Frankfurt down just by fractions up. I mean, up by fractions. Generally, I have to say we are not seeing much action at all. It seems European markets now, after this action-packed week, mostly with Davos, they're running a little bit out of steam. Gold is still going strong, and looking at all the global markets, I think that is the most interesting story right now. Gold climbing to new heights every day, and it's not a good sign. It means investors, of course, are more worried about the stability of stock markets and bonds, of course, as well. So they're looking for safe havens, and gold is still the most popular one.
We know that a lot coming out of Davos, especially the peace deal, or the deal that Donald Trump says he has gotten with NATO regarding Greenland, and not a lot of European leaders seem to be pleased about that. But this big news coming out of Davos right now, what are the European leaders, what can you tell us about it?
Well, Will, there are actually now financial consequences being taken on the continent, not only this week, but this has been in the making for quite a bit, but it seems to be intensifying because European leaders, European countries here are obviously not happy with the situation between the continent and the United States. Now, Danish pension fund, Akademiker Pension, has announced now that they will be divesting from U.S. government bonds. It's due to, quote, the poor state of U.S. public finances, but the fund's investment director also allowed that the current political developments, again I quote, didn't make the decision any more difficult. And then there's a Swedish pension fund, Alecta. They just announced that they've sold most of its holdings in U.S. Treasuries over the past year. Also, quote, because of the increased risk and unpredictability of U.S. politics. Now, you know, these are not big funds, so these moves won't really have too much of an impact, but they are worrying some people, especially since other countries too are debating a divestment from the U.S. In fact, a bond market analyst for Deutsche Bank has just come out suggesting that European investors sell U.S. government bonds. European countries hold U.S. bonds and stocks worth around $8 trillion, and a capital outflow of these proportions would obviously put immense pressure on U.S. bond prices and drive up yields too. Now, of course, some other analysts are saying that weaponizing the bond market this way would be dangerous, not only to the U.S., but to investors as well. And even Deutsche Bank says they do not intend to follow their analysts' recommendation. But it is worthwhile pointing out that Deutsche Bank CEO actually got a call from the U.S. Treasury Department now to discuss it. So it's clear that Washington is aware of these ideas bubbling up in Europe, and they are worried about it.
But are these financial actions or threats against the U.S. limited to the banking sector?
No, not at all. In fact, in Denmark, for example, there's a movement to boycott, or at least to avoid as good as possible, goods made in the United States. It has gone so far as for apps being developed to help consumers find out whether a product or in a given supermarket or store has been made in the U.S. There is one app called Uden USA that translates to without the USA. That has, in fact, made it to the top of the list in the Danish App Store, and that particular program has a database of products. It tells consumers if a product was made in the US and imported to Denmark, and it also actually suggests alternative products, as to some of the country's supermarkets too, that have started putting stickers up to identify U.S. products. Now, as much as this is a sign of Danish people's anger over recent U.S. policy, it is, of course, unlikely to actually have much of an impact. Denmark is a rather small country with only 6 million people. There are cities in the U.S. that are bigger. So even a total boycott in Denmark would not make much of a dent here, but it does show what the mood is like in Europe these days.
Definitely, especially with Donald Trump shaking the world at the World Economic Forum with his speech. We just hope that European leaders do come together and find a way to come out of this and negotiate a path that is productive or fruitful for the European Union. Thank you so much, Lars Alter.
Let's hope for the best. Thank you.
Yes, thank you so much, Lars Alter, for that. Lars Alter right there in Berlin joining us directly. So let's see other markets now. We're checking with crypto markets. We see Trump suing JP Morgan and others for... Oh, let's see what's happening in the crypto space. Let's see what's happening in the crypto space. Donald Trump has filed a $5 billion lawsuit against JP Morgan Chase and its CEO, Jamie Dimon, accusing the bank of unlawfully debanking him and affiliated businesses for political and ideological reasons. Now, in the suit, Trump alleges that the banking giant abused its market power by terminating or restricting banking relationships, causing financial and reputational damage. He argues that the move reflects growing discrimination by major financial institutions against certain political actors and viewpoints. Now, JP Morgan has yet to respond in detail to the claims, but the case is expected to intensify the debate in Washington over financial access, corporate power, and the politicization of banking, especially as crypto and alternative financial platforms gain momentum in the U.S. Now, let's look at other news coming out of crypto. The U.S. financial regulators are showing rare unity on crypto policy as the Securities and Exchange Commission and the Commodity Futures Trading Commission move toward a more coordinated approach under the Trump-era policy direction. Now, after years of turf wars over who regulates what in the digital asset space, both agencies are now signaling closer cooperation in oversight, rulemaking, and enforcement aimed at giving the industry clearer rules and boosting investor confidence. Now, officials say the push reflects Washington's growing recognition of crypto as a strategic financial sector, not just a regulatory problem. And the shifts could accelerate legislation, attract institutional capital, and reshape how crypto businesses operate in the world's largest financial markets. And finally, we see crypto hardware wallets Maker Ledger is planning IPO, public offering valued at around $4 billion as demand for secure digital asset storage continues to surge. And the company has benefited from renewed interest in self-custody solutions driven by rising crypto adoption, regulatory uncertainty, and lingering concerns about the safety of assets held on exchanges. Now, sources say the IPO would mark one of the biggest crypto-related listings in recent years and could further signal a return of investor confidence to the digital asset sector after a volatile period for the industry. And those are the stories making major news, making new moves in the market today. Definitely we'll catch up next week. This is the final edition for this week. We'll catch you next week. I'm Will Ibong. Thanks for watching.